Hey everyone, this is Patrick from EasyFX Code Trading System, and this is Saturday, the 27th of June 2020, and this is the weekly analysis for spot gold and dollar yen for the first week of July. And for last week, spot gold is still continuing its bullish move after making a new high for the year, and since 2012. Dollar yen has just been hanging on and avoiding falling further. It was a risk-off mood for last week in the stock market. Let's take a quick look at the S&P 500. This is the weekly chart, and it's struggling to make any headway. And last week it was being pulled down after attempting to climb up higher. And the main theme for last week is still on the COVID-19 pandemic and the possibility of second wave. More cases in the US now, in still at least half of the states. So there are fears of resurgence, and there's renewed lockdown even in Texas, where a lot of cases have emerged. And the other impact is on the still news floating around on the phase one deal between US and China and whether it's still on or not. So those were the drags on the markets, and that helped the spot gold. It started off the week climbing through the 1750 level and hitting a high on Wednesday, 1779, and pulling back. And then late on Friday, before the close, it bounced off the 1750 retest and then push up higher above and close above the previous high earlier of the year. On the weekly chart, you can see this bullish close after the breakout through the triangle. And back on the daily chart. So now this level is a previous swing high, is a key support, and it needs to stay above that to continue and break out higher. If it does pull back lower, it could come back to retest at the upper trend line of the triangle that it broke out from. Or worst case, it will pull back to the monthly pivot, which there's only 2 more days for next week, so that's unlikely. Monthly pivot is at 1721. So I think let's remove this area here. So key support is at the 1750 because looking at the double bottom here and bouncing off the support, you can see on the 4-hour time frame the last couple of candlesticks before the Friday close, and this was at from the 10 p.m. Singapore time and then to the 2 a.m. till the close of the market, and that was the bounce off support from the 4-hour 55 EMA, the previous swing high at the 100 fib, and the monthly pivot. So from this support zone, they managed to bounce through, and this was the swing high fib that we had drawn. All right, so continuing this week, it could extend its gains further. It's got to break the high recent high through the it had already spiked through the 138 fib extension of this swing move from this recent low to high, breakout from the candle, and the next target will be at the 162 fib area, around the 1780 area, sorry, 1790 area, and if we can move this fib to a reversal move to the same swing low but at the previous swing high of the year, and that extension to the 138 Fibonacci level is at 1801, and that's at a key round figure at the 1800 area. So if we can extend all the way to the 162 fib, it's only 200 pips away, then the next target is going to be at the 1800 round figure, and possibly spike the 138 fib extension. So we'll see next week into the first week of July. And the support side is still at the 1750 or the swing high at the 1744. Of this swing high here. All right. Okay, and there's only a couple of key news next week. Of course, the major one is the non-farm payroll, which is not on Friday this week because of the US 4th of July holiday weekend coming up, as a holiday starting on Friday. So the non-farm payroll report will be released on Thursday instead. And prior to that, there's the Fed Chair Powell is giving another testimony on Tuesday night for Singapore. And that's about it for US news for next week. All right, let's take a look at the dollar yen. Dollar yen fell through the support trend line, and that was on Tuesday, and all the way to hit the previous swing low that we identified as a support area, and that's just at the 106, and bounced straight back up and followed through higher back to the monthly pivot at the 107.28, and then consolidated for Friday and still holding above the uptrend line here. So this zone is still a key support zone. It was broken, but now it's still a valid support. Now we'll see whether it's going to just consolidate again for the first couple of days till the end of June to close within this range, and then in next 3 days of July we'll see if it's able to climb back up above the 62 fib here to retest 108, or whether it's going to fall below the trend line and retest 106. Alright, let's take a look on the weekly time frame, and it's a bullish close for the week, so there could be further bullish momentum to climb up to perhaps the 108. And but if it's not able to break through the 62 fib retracement, then it could consolidate. Alright, and for a shorter term move, we'll see if it's a bearish move. There could be significant fall if it falls through the 106, which is right at the support level that we had highlighted. And the extension is going to be below 105, so 138 fib extension is at 104.50 area. So if there is any weakness, that's going to be a danger sign if it breaks below 106 and 105, and then 138 fib will come into play here. And the 138 fib extension, there was this previous swing low support from, there you go, from August of last year. So that's hovering near the 138 fib extension as well. Alright, but for now it's possible that it's just going to consolidate and hang on. Alright, so do have a safe week next week, and have a good trading week. Do check out my other videos on the other major pairs as well, and cheers for now.